as you may have seen, like Instagram and Facebook, and then also on our email listserv. Speaking to us today. So he's the former director at Goldman Sachs, Varde Partners, and now has founded Elevate Career Network. So we're super fortunate to have him come speak to us about his experiences on Wall Street, in finance, and kind of transitioning into his new venture now. So with that, I'll turn it over. Do you need to be able to screen share? Because I know you might have a presentation that you want to share as well.
Yeah, sure. Yeah, that would be good. That would be good.
Okay, cool.
I think I just enabled screen sharing. Let me know if you can see it.
Hey guys, welcome. Thank you, Michael, team, for having me on. I am still investing. So Michael, that's one thing that is still ongoing. I'm also running Elevate. So it's a little bit of a the balancing act. Hopefully in the near future, I can spend a lot more time on one or the other, but I think, thank you for that warm intro. So yeah, I'll give you guys a little bit of a background. I'm very excited to be back at Duke. I think we had this on campus last fall, and so it's sort of very different environment than campus. But I'm super excited to be here talking to you guys. I think the goal of today's session is to just I go over my career background, but then really use this as a platform for all the folks on the call to just get a better sense of probably three things, right? One, my own career journey and what helped me sort of achieve success or sort of this accelerated path in a short period of time. So I'll go over some of those things. Number two, I think answer any questions and also take you guys a little bit behind the scenes of how some of these, careers work, starting from recruiting, but also just on the job and what it sort of takes to be successful, as well as what the outlook and career paths look like. And then I guess number three would be really to operate in this new environment that we're in, kind of what we're seeing in the industry out there and how you all can be successful in that space as things around us are changing so dynamically, right? So I think we'll try to cover as many of those topics as possible. I would encourage you guys, as if you have questions, to loop them into Michael, Hannah, or team, or you can and all the folks that connected with me on LinkedIn, et cetera, before the session. Super happy to see that. If you guys have questions, I will promise I'll get to them after the session if we don't get to them here. So yeah, feel free to. I will also, Michael, share with folks in the chat. I guess Wendy, I can send it to you. But if I'll put out like just a spreadsheet for people can fill out their in names or emails if they want to get added into some of the we're working on. So I'll send that to you, Wendy, and you could share it with the group. All right, cool. So let us jump in. So I will share my screen now. All right, so let me give you guys a quick overview of my background. So like Michael mentioned, I've spent the last 8 years in investment banking and private equity. A couple of things I'm super proud of early on in my career have been sort of getting to these markers, as you might call it, right? So kind of making principal in private equity by the age of 28 and then director by the age of 30. I think while those are sort of numbers, I think they're in a lot of ways sort of really happy with sort of the experiences that I've been able to build and also contribute to the kind of the world of business. So I'll talk about some of those transactions, deals, etc. Lots of transaction experience early on in my career. I think as I look back, and I've done more and more of these sessions now, one of the things people really ask me is like, how do we sort of take full advantage of the next few years ahead? And realistically, it's to align yourself into industries, businesses, and sort of where the action lies. So coming out of this crisis, where going to be a lot of opportunity, sort of areas like distressed investing, areas like, healthcare, areas like technology, et cetera, really finding your own voice is going to, I think, help you guys a lot over your careers. As it relates to private equity, director at Varde Partners, where one of my responsibilities is building out the North America and Asia private equity businesses. So, I think, that's a very interesting responsibility as you think about it globally, and then we'll kind of get into sort of the global world of business, because a lot of times I think when we start, whether it's investment banking or consulting in the US, we take a very US centric mindset and sort of, 2/3 of the GDP lies in a lot of these other areas where, where there's a lot of growth and also a lot of opportunities. So kind of how I thought about a global mindset later on in my career. Prior to that, as Michael mentioned, I was vice president in Goldman Sachs's principal investing group, which is our private equity business, investing in financial services and technology. So, we'll speak to that experience as well as prior to that, I was in investment banking at Goldman Sachs as an associate. There, I got the chance to lead sort of some of the biggest transactions ever as I look back in the financial services space. So coming out of the last crisis, I led the disposition of GE Capital, the IPO of Synchrony, which is a lot larger since book, as well as a handful of other transactions, which ended up being sort of market moving transactions. And we'll talk about kind of what are the role of the associate and the analyst, those types of transactions and how to maximize that. One other thing I'll highlight is the idea of people development and leadership. That's just something that's been very important to me. As I look back, I came from a sort of an immigrant background, a non-target background, and I think a lot of the success that I've been able to have is a virtue of the people that have trusted in me or believed in me or kind of shown me the way. So that has always been important to me. So at Goldman Sachs, I was sort of chief of staff in investment banking for several years. I also led our recruiting committees and our promotion committees. So it's really important for us to, hire, retain, as well as over the larger finance industry kind of, or just business world in sort of best in class professionals. So I think it's just been really, really important to me. Related to that, sort of the second thing that Michael brought up, I've established Elevate as a platform to really connect best in class folks in the industry across sort of the top firms in the world, either via my network or the network of Elevate, along with partnered up with, I guess now close to 40, 45 universities and their premier finance club, like such as yourselves, undergrad side and grad side, to provide sort of this best in class access to resources, advice, training, networking, recruiting, everything that fits under the sun. Because I think over the course of my career, I felt like a lot of those areas have been broken in the world of finance, and I think it just need help. So I will answer any questions as it relates to this. As I mentioned, we sort of have a building team now of advisors, leaders, and et cetera. But the overall mission is to provide access to the highest quality resources, training, content, networking, all that stuff for these careers. Not just, I think, but I think what I'm realizing more and more now with my MBAs and so on is sort of a throughout your career journey of that career. We'll go over some of these resources. We have a bunch of panels coming up. I'll send them via Michael to share with the group. I definitely encourage you guys to sign on or add your emails, and you'll get all the info regarding all this stuff on our newsletters and all the other stuff. So cool. So let us jump in, Michael. If it makes sense, do you want to switch to questions or sorry, some of the agenda items we talked about?
Yeah, I can start it off. So obviously, as you mentioned, you've had a very accelerated career in finance and investing. You talked about how you made principal in GS by the age of 28, director in PE by the age of 30. Could you kind of talk about your career journey as it relates to how you got into PE and in general, your keys to career acceleration?
Yeah, happy to do that. Just so I know, is the audience sort of similar to last year, a lot of sophomores and juniors? Is that fair?
I would say so, yeah. A lot of sophomores and juniors.
Okay,
cool. A couple of freshmen sprinkled in there as well, but yeah, mostly
okay.
sophomores and juniors.
Okay, cool. So if folks have like sort of any questions about any technologies or things that we're talking about, I'm happy to hit that. I think the question around private equity, one thing I think we all have to, especially if you want to, well, before I actually even jump into that, I think the goal of today's session or what I want to get out of this for all my Elevate members is, I think I want, what I want most is for people to find and discover the things that they're really, really interested in and can become really good at. It could be in the world of finance or business or outside of it, but that I think is really a goal that I challenge you all to sort of focus on through the early part of your career, right? So by gathering sort of different sorts of experiences and different, professional, personal, internship, leadership, all those different experiences, is to really chart out yourself where your true passions lie, where you define as impact, and then how you can become sort of the best at that area, right? So this isn't in any way like, hey, finance is a path or the only path or the Bible path. It's sort of a journey for ourselves to figure that out. So that's the first thing I'll say. And then to more specifically the question, I think the question I get a lot about is, hey, whether to go into sort of advisory versus investing. And then the follow-up question to that is like, what types of investing that's out there? And then sort of, should we go into private equity versus, growth equity versus venture? And the answer oftentimes is like very personal to the people themselves. And I think where we've probed this, we really, I think, I've tried to, discover and for the students themselves, as well as, our Elevate people, like we're trying to figure out why are these areas that you think you've heard about or you see in the news or read in the Wall Street Journal or whatever, why are those interesting to you? So the first step of that is, I think, really understanding what happens behind the scenes here. And so for me, as I look back early on in my career, I actually didn't have a finance background before my MBA. So for me, like going to Goldman was a completely different experience for me to get sort of that first foray into M&A. Yeah, I was early. And so, I think that really helped me out. But I think, so for me, investment banking was an amazing experience. I think it was a combination of the people I worked with, the transactions and deals that I worked on, as well as sort of, the relationships I was able to build both from at Goldman as well as at the client side. So it was actually a really hard transition for me to think about doing something different. At the same time, I think I was really interested in private equity and investing because I probably want to do something new, right? I think every few years we get this itch to like try something new. I think the second big thing is I was really interested in switching my mindset over from being just an advisor on businesses to now a principal owner investor in businesses, right? So you'll get that across both private equity and like public investing or hedge fund investing, where you kind of have to peel away a little bit of what you do in banking, of being an advisor, and really dig in and say, hey, am I comfortable sort of owning this company as a business? So I would say that's one thing about private equity that I think I've discovered over time as something, or just generally as investing, that I really enjoyed. And not, some one versus the other. So that goes back to kind of you discovering what you're really good at. For me, kind of I made that transition as an associate, which is a little bit of a different transition as, a lot of my Elevate students who make that transition as an analyst. But at the end of the day, it's to find the firms that you aligned with as far as their investing methodologies and ideas. It's to find the group of people that you want to really learn investing from and become better at it. Because that's what I found at PIA is the people that at Goldman, in fact, the partner I work with actually sat right next to his office, and he was the CIO of the entire fund. And so, managing X billion dollars. And he would have his door open. So I think it was like, an incredible opportunity for me to hear every single meeting that was happening in there, right? So I think, and really build that skill set of investing, which, and it's funny, I've now talked to so many investors on a lot of the Elevate stuff. The biggest thing that I hear is, to get really good at it is by practice, and to work is sort of an apprenticeship model, right? So I think those are a couple of things from early in my career that really stuck with me. And yeah, so I think for me, investing again was a transition that I was doing a career that I don't think I really knew what I was getting myself into. So to do that, the first months are really, really tough because you're still sort of figuring everything out. But, thankfully it worked out because you get to work with good people, you get to work on good transactions, and really like put on that learning mindset, and that's what helped.
Awesome, thank you. I think also, as you mentioned, like a lot of people potentially going through recruiting soon or are going through recruiting right now, interested in investment banking. So if you could talk a little bit about your transactions that you've worked on over the course of the career. I know you've worked on, for example, the 50 billion M&A sell side of GE's Capital US businesses, and then also the IPO and split off of Synchrony, which was the largest since Facebook. So if you could touch on a little bit of that, and then I think that would give a bit of color for people, give them a better idea of whether or not IB is right for them or some cool transaction they can hear about.
Yeah, sure. So that's a great question, Michael. So I think as I sort of think about sort of some of these transactions, if you think about what your experience in investment banking is going to be, even if you step back from your personal experience and think about what an investment bank does, in some sense, the best way to sort of think about it, I think I have a slide on this. So let me maybe I'll point to that. So over time we were on this topic so much that we decided to put a slide on this. But in my mind, when I think of investment banking, I sort of think of it split out into 4 big segments. One is mergers and acquisitions. So this is the area that I work in, and then the area that Michael now alluded to. So if you're an advisor to corporate clients, so it could be large businesses, private equity firms, et cetera, and helping them either as an advisor on either buying or acquiring businesses, selling businesses, or other strategic transactions, right? So this kind of includes everything under as sort of a trusted advisor. You're a trusted advisor to the management or the board, and any strategic action they want to take, they would hire us. So if they want to sell a part of their business, they want to sell themselves, they want to buy a company, they want to enter a new market, whatever it is, that's the role of an M&A advisor. And so in this segment, as an analyst or associate, you're really doing a lot of the work behind the scenes around putting transactions together, all the detailed analytics, and everything that goes around sort of valuation, structure, and even managing the process itself. So that's kind of how I think about it on the M&A side. Then you flip to capital markets. This is another big area of investment banks. And it's divided sort of into 2 areas. One is on the equity side and one is on the debt side. And effectively here, again, you're an advisor, but you're advising companies sort of on equity transactions. So IPOs, follow-ons, equity-linked securities, whatever. So on and so forth on the equity side. So basically it goes to market like an Uber, and they're like, hey, I want to raise money from the public markets. I want to go IPO to inject new capital into the company and to diversify their investor base. They go IPO, and so I think you help that company put all the their entire force behind an IPO and going to market such that they could maximize their value. And on the debt side, given the markets that we're in order to get cash into companies, you advise them on raising debt in kind of the debt market. So that's sort of how I think of capital markets as an advisor. And then obviously there's leverage finance and restructuring, which we don't have to spend as much time on here, but those are just other functions of a bank. So the question was around my own deal experiences in area, and I'll touch on 2, right? One was the IPO. I'd never worked on an IPO before. And so for me, and then I got staffed on this one, which ended up being this like huge $3 billion IPO. So for me, so much of this experience was just figuring it out as you go, sort of like fake it till you make it. Because I think the one thing you realize in investment banking is it's a very lean sort of organization, right? So you are hired on, in the industry as someone who has real judgment, who has, really ability to lead processes kind of independently, and then also really good analytical skills, et cetera. So you kind of have to use all 3 of them in the job. There's no sort of blueprint for any transaction. And so for me, the biggest thing I learned in that IPO, and I think for me, I was also leading it as an associate, right? So we didn't have a VP on the team. So it was 2 partners at Goldman, and then me as an associate. So for me, it was really, how do I build the best client relationships? Like, how do I help this company, which was being carved out of GE, which is a large entity, into establishing itself as its own sort of, $20, $30 billion market cap company. So for me, that was sort of the challenge. And then you really had to break it down. I think, it's such a complicated process. It goes, from start to finish. It could go from anywhere, from 6 to 9 months to maybe a year to help a company go, thinking about an IPO to actually going public. And so for me, it was an incredible experience because you got involved in business operations, business strategy, marketing, sales, financials, governance, that entire gamut of how you think about running companies. So for me, I think the IPO was just an incredible opportunity to do that. The second transaction around the sell side, a different process. So this is kind of when GE was looking to sell all of their North American finance operations. So at the peak of the crisis, this was sort of a $500 billion business, as you think about it, within the overall GE. And because of the crisis, they had some with the business. So they basically wanted to find a new buyer for it. And we as Goldman were hired as the financial advisor on that transaction. And that was as an associate, again, sort of managing these enormous transactions of big size, but also, it's sort of a very process-driven thing. So on the M&A side, as a sell-side advisor, your job is to find the best buyer that, for that asset or business that you're selling. So in this sort of complicated transactions, we had, large institutions, pension funds, big banks, private equity firms, and all sorts of buyers looking at sort of taking a chunk out of this business. And so I think the biggest thing that M&A process was, how do you manage all these different parties, really like the tactical, how deals come together. It's actually, there's a lot of like negotiations, tactics and stuff that goes on in M&A that maybe as a junior person, you don't see all the time. So for me, it was like really good opportunity to get ahead of and sort of do that on the tactical side, but also I think really build relationships with senior people at all these different things. That was a big bonus for me along the way on that as well. So those are just a few things that stick out to me on those two transactions. I'm happy to go into to more detail on those or others. I think just generally, I would say whatever transactions, like it doesn't have to be a big transaction or small transactions. I would just try to do two things when you guys, go into the industry. One is like where do you add value and where can you learn, right? So if it's something new that you haven't done before, like leading an IPO or leading whatever it is, like really understand and take ownership of all the details, because it's going to be hard day one, it's going to be hard week one, it's going to be hard month one, but as you sort of do that and really start taking ownership and digging into the details, you start yourself building more confidence and gaining control of the situation. And then that reflects externally, right? So if you're in a meeting with a partner and the partner says, hey, what's 2020 EBITDA? And you're like, oh, everyone's fumbling around. And you say, hey, you know what? We did the model last night and this is how it shakes out. I think you instill other people's confidence in your abilities. I think that becomes really, really important as you progress through your career. And then second thing is, do put yourself in challenging situations, right? I think you can go kind of cruise along in investment banking or some, one of these careers for a couple of years, work on same types of stuff, but really it is an incredible opportunity to work kind of at the forefront of business and finance in a lot of cases. I encourage you guys to put yourself out there and work on challenging assignments and with challenging people. You can really learn a lot. I think those were two things I certainly took out of it early on in my career at Goldman. So let me pause there.
Gotcha. In addition to like the transactions and networking type everything, do you have any stories of your early days at Goldman in investment banking, what that was like, what your experiences was, the culture, anything that you want to touch on there?
Yeah, sure. So I'll just touch on this, and I think this, and I'll speak to GS, but I'll try to keep it a little bit more general. I would say, and I highlighted a couple of these things in a little bit earlier. One of the biggest, the greatest thing I look back on as very fondly when I first started at GS was the relationships I think I was able to build both with senior people, but more importantly, my peers, right? So I think we go into COVID now, it's a little bit more challenging to build some of these relationships where you're sort of sitting in the bullpen together and working on things together, and we can kind of discuss on ways to do that. I think to me, that's been the greatest sort of thing I look back to, because you work really, really hard, but you also really like the people you work with. And so job, just a lot more interesting and engaging and just, you want to do your best because you want to sort of work with people that you like. So that's one thing I think I fondly remember of my sort of early days. Number two, I'll be honest with you guys, I didn't know what I was doing the first 6 months of the job. So I think, if you are ever in that position, like, don't worry, because, that means you're probably in the right place, right? So I think you want to be in positions of uncomfortability, et cetera, because especially your first 6 to 8 months, like, like every day I felt like I was underwater. Every day I felt like there was just way too much going on. And oftentimes you go to meetings and I felt like it was like in a different language, honestly, and some of the things that people talked about. And I think it was a challenge upon ourselves to either step up and figure it out or sort of like continue to drown, right? So I think you have to break it out into sort of bit-sized pieces and really like try to break it down that way. So that was one thing I definitely remember as being really, really challenging. So maybe not the fondest memory, but something I definitely learned a lot from. I think that helped me later on put myself in positions, whether it's investing or now kind of building a global business, sort of things like that, in investing, like just uncomfortable positions. I do think one sort of downside of sort of going into a lot of these structured careers is that you're not given as many opportunities to sort of think independently. So challenge yourself to think independently, take risks, et cetera, wherever you can. Another thing I really enjoyed, I think, was just the autonomy that you're given, even at a very junior level. A lot of the firms that I've worked at, I think people give you enough rope to sort of go and figure things out. And so I just say taking advantage of that is really, really important, because again, you may be on 2 or 3 transactions when you first start, but to the extent that you have control over them and are doing a good job, people will give you more responsibility. So I think that was another thing that I fondly recall, because soon it was like first month it was really challenging, but then month 2, month 3, you're the one leading the client calls, right? You're leading the calls with the VPs and you're leading the calls with the CEOs, CFOs, and that requires sort of that initial investment, but also I think over time requires sort of the that confidence to do that. So I just say that's the other thing I remember, like people weren't afraid to let you run things and sort of fail and figure that out.
Great, that's super helpful context on investment banking, the career, some of your experiences. Maybe if we could transition and also provide more context about like private equity and what your experience has been like, starting a global business and overall that transition to investing that you've had.
Yeah, it's a good question. I think for people who are sort of not as familiar with private equity, I think that's a good question. I'll give you guys a little bit of background. I think I may have a slide. If not, I'll just speak to it. So let me just speak to it first. So private equity is a completely different skill set than banking, right? So PE and generally investing as a whole, you're part of a fund or group of investors who's looking to make investments in ideas, companies, businesses, people that are effectively good investments that you can own on the private equity side over a period of time. Have control stakes in over a period of time, and then eventually divest and sort of make an outsized return, but also improve the underlying business and company that you've owned, right? So it's a very different mentality when you think about it than investment banking. Whereas investment banking, you're an advisor, you're not a principal. You're an advisor on really top of the market transactions, but effectively though you're not an owner, right? So once the transaction's done, you sort of walk away and do another transaction. So on the PE side, I think the biggest challenge for me was initially to sort of switch that advisor mind off and not think like an owner, right? So I think that's something I encourage, I think all of our students, all you guys and everyone to take upon, is even the things that you do now, dig in and understand companies at a deeper level than you might otherwise. And I think that'll really help you as an investor later on in your life, or even, in the short term. And then to your question, Hannah, on like, how do you sort of make that transition? Look, I think the more traditional path has been, you go into banking for a couple of years and then you recruit for, private equity. We're going to have on one of our panels in, I think it's in October. We're going to have on an associate now who's at a kind of top 3-4, mega fund or 5 mega fund, who just went through the process, last year. And we'll talk a little bit about what is looking at these days. But I think more broad, and we're also having a partner from another fund who, who now sees it from the other side. And he was one of the original members of like SSG at Goldman. So really a lot of investing early on. And I think that the thing that I learned that I kind of passed on, so you guys can definitely try to attend those and ask people as well. I think the one thing that I think that the natural transition, right? You sort of do a couple years in banking and then you go to private equity. It's a little bit more natural in the sense that you're getting a lot of transactional experience in investment banking as an analyst. Like all you're doing is running through analytics, et cetera, and then making that switch to private equity, where you are effectively like as a private equity associate, investment banking analyst, now just working on PE deals. So it's a lot of that same type of mentality of running deals, et cetera. However, sort of a year or 6 months to a year into being a private equity associate, expectation of you guys is now taking it one step further than the analytics to then taking it one step further and actually start thinking about the deal itself. How do you run the deal? What are the merits of doing this deal? What are the risks in doing, and effectively sort of elevate yourself to that principal level, which is what I look for, over my, in sort of hiring or associate candidates. So can you convince folks and funds that you're not just able to take care of the analytical portion of things, but also really able to develop that investor mindset and kind of dig in and look at companies as investing opportunities. And that is really the hardest part of the transaction. The second thing I think that's hard is as you go through the channels, like as you go through becoming more and more senior, so from associate, then to sort of principal, then to director, the nature PE job really evolves, right? So whereas as a more junior associate, you're doing a lot of the diligence, you're running a lot of the modeling. As a principal, the expectation is you're running the entire transaction. So in order for a transaction to happen, right, you have to not only have a very effective sourcing channel, which means getting new business opportunities and looks at new things, but also then really focusing on execution of the transaction, which is everything from, relationships with bankers, all the financial modeling, legal diligence, market diligence, and so on and so forth. So there's a huge array of responsibilities that you're responsible for as a principal in private equity. Obviously you build up to that, but I think just noting that job is probably the hardest job that I've done over my career, just kind of having that all, just being the endpoint for everything that goes on in a transaction, for better or worse, right? So I think that's a really, really challenging part of the job. In addition to that, as you sort of then make the transition from principal to director, you're focusing a lot more time on operations, right? You're spending a lot more time on strategy, like how do you fundraise, how do you go into markets, how do you develop sort of broad investing theses, but also around, how do you work with your portfolio companies that you own now and make them better, kind of from A to Z. So then you start really flexing your operational, strategic, balance sheet, all those different, muscles in your head. And so I would say it's a progression, Hannah, to your question, sort of entering in as an investment banker to analyst 2.0, and then slowly progressing through owning deals, then owning business strategies, owning growth, and then owning the entire sort of the vision of the fund, we call it. And that's how the progression sort of goes in PE.
That's awesome. Thank you. Super helpful. We have a question that came in as well. We would love to maybe hear your thoughts about like the difference between principal investing at a bank versus a classic PE fund.
Yeah, that's a good question. And I will just remind folks, if you haven't, and for the 40 or so people who've done it, the Excel thing that's up that Wendy sent around. If not, you can, feel free to do that. It's the resources for you guys. So I encourage you to do that. But I think it's a good question. I would say that the landscape of principal investing these days is very different than maybe it was 10 years ago versus even 5 years ago versus now. I think sort of 10 years ago, you had a lot of, I'd say, sort of coming out of the last crisis, where businesses started divesting these sort of businesses a lot more. You had a lot of banks actually have principal investing businesses of different sizes, right? I think Goldman historically has been the biggest, where it's operated as a standalone mega fund in some way. A lot of banks have sort of, dipped their foot in and done different things. So I think a handful. So I would say there's definitely different kind of pros and cons to either. I think the biggest thing that I would challenge everyone to look at, whether it's a kind of principal investing arm or a fund, a mega fund or a middle market fund or whatever, just get a sense from, is that investing strategy and type of the work that you're doing and the way that you're doing that work something that's of interesting to you, number one. Number two, and what's their track record been? And then number three, like what are the types of people that work there, right? So that's the first lens of sort of things that I would think about for you guys, whether it's even comparing, one fund to another, or whether it's principling or not. I think about principling within a we didn't have as many challenges at GS, but I think some of the other banks, probably because of their scale, have a little bit more of a challenge around one being a market leader, right? So one thing, you want to try to be aligned to a place where you are getting looks at really the quality transactions and from a sourcing perspective, right? So if you're just sort of a small principal investing arm of this like huge bank, then I think there's natural challenges to the types of deals that you see and the types of, the sourcing opportunities that you get. So that's one thing to think about. Didn't have as much of that problem at GS because it was already market leader. Number two, you gotta want to have a sort of at least a dotted demarcation between the two. In other words, like it operates in, it usually operates very independently, but there's no conflicting interest, right? So one thing that when you go to sort of these principal businesses is if the investment bank is really strong and the PE business is really strong, like what happens for the businesses that we could be a sell side advisor, but also kind of want to take a buy side role. And so that's one definitely like thing to think about. Again, we didn't have as many challenges at GS because it was separate, distinct and separate as its own. That's something to think about. Another thing I would say is just sort of the types of deals that you can do, right? So I think a lot of the banks have restrictions on types of deals you could do, types of companies you could buy. Again, we didn't have as many of this because it was separate enough when we were raising external capital and all that stuff. If you're investing the bank's money, then I think there's definitively things you can and cannot invest in, types of businesses, and sort of a lot of risk-related capital measurements and stuff you need to take. So definitely something to think about. I would say, I think if it's sort of, for me, I really did want to stay at GS if I could, because I just had built such a great relationship. But if you're sort of more of a junior, sort of an analyst, and aren't as tied to a place, I would encourage you probably to try and look at somewhere externally such that you can at least get sort of 2 benchmarks on 2 different places to work at, and then think about going to get an MBA. So I think it's sort of situation specific, firm specific, but things to probably watch out for are the caliber of deals that you're getting in there, their track record has been, and then for people that you're going to work at, and then use those as barometers to then make a decision on if that's a right fund for you guys to join.
Great. I think you've done a really good job of like giving us a good idea of how to actually succeed in these roles, how that responsibility changes as you move more up the ladder and everything. But I think the big question on everyone's minds is like, how do I get into these jobs in the first place? Like, how do I recruit for IB? What are the keys to success? And then maybe if you want to talk about also like the differences between PE and IB recruiting, and how it changes, like your strategy should potentially change between those.
Yeah, absolutely. And I noticed, Michael, that's a good question. I noticed on the spreadsheet, there was a lot more of 23s and 24s. So, you know, as far as like class year, so it's actually a good topic for like the recruiting side of the world, which, you know, a lot of the upperclassmen have already sort of gone through. So we'll spend a few minutes on that. I do want to hit on, I think 3 big areas within recruiting. And maybe I'll start with taking you guys a little bit behind the scenes of what happens at recruiting. You know, I'll speak a little bit from what I see on Elevate, kind of working across, you know, X firms every year, but also, you know, kind of speak to my experience at GS as, you know, chief of staff, the roles that in the recruiting teams and that I've had. You know, if you think about how recruiting works, first thing I'll say, it's not the most exact science, or, you know, sort of it's haphazard, right? So that's the first thing I'll say. So there is no formula, right? There's no like, hey, I need this, then I need this, then that. It's sort of ensuring that you have 3 different things in place, at least, that hold it together, that's such you're a good candidate. So the first one is, actually 4. The first one is for yourself, getting just a much deeper understanding of these different careers and career paths, and as well as about yourself. So the self-introspection. And I understand as a freshman or sophomore, this be like a little, because you just started college, etc. But you know, so my first point is, take as much time as you need to explore these careers. Talk to upperclassmen. Like, I know I've had a great, you know, chance to work with Michael and Hannah over the last year on investment club stuff, and they're great mentors. And not meaning you should, you know, bombard their email boxes, but I just mean like use the people ahead of you who sort of, you know, been successful through parts of this process to really get a better sense of understanding what are these careers all about, and hey, you know, what attracted you to this, right? So that's sort of one metric, one lens to look at this. Just then, does that resonate with me as to what I'm looking for in this career? So a lot of people, I don't think, spend as much time up front on the introspection part and just sort of just do it because everyone else is doing it. That's fine. But you lose the opportunity, I think, in undergrad to really have a blank slate and go into things that you're really, really interested in, and then why. So I think that's the first thing I'd say. So and kind of that's juxtaposed into this recruiting timeline, which is very, very, you know, compressed and very early in a lot of cases. So once you've done enough of that diligence and have a better sense, then it's sort of time to dig in, right? Or can you dig in? Because the processes do favor people who are either more prepared and more ready, frankly, for the whole process. So then what I would do, so once you have that self-introspection and understanding sort of building, or it could be ongoing, I think the second thing I would do is figure out sort of what the pathway looks like for you, right? So if you think you want to target sort of getting a junior year internship somewhere, you know, sort of the first step to a lot of that is one, build whatever your repertoire of experiences is and interests are that would sort of lead you up to that, right? So the first step is to say, all right, if you're a sophomore, how do I get that best sophomore year internship that would be a positive indicator to someone who's recruiting me full-time, right? If you're a freshman, how do I get some foot in the door in my freshman year of any internship, be it full year, et cetera, but just start getting, you know, an internship experience that you can then put on your resume and then use that as a platform to go to the next, right? So you're just going to go from like A to Z, right? You're going to have to build on that. So the second thing here is just a pathway to develop any set of financial, business, operational, strategic experience that will then just be sort of a starting point on your resumes, right? In that implicitly is the third thing I'm going to bring out is networking, right? So I know we hear this a lot about people about networking, and networking, frankly, isn't just for people who are looking for their first job. I would say actually something that continues throughout your whole career, right? You're continually doing that because you're continually building relationships. But for you guys who are early in their careers in banking, and then I'll go to private equity, I think if you're early in your journey, I would just say start with upperclassmen, start with recent alums, but just start developing that sort of habit mentality of connecting with people, learning about their stories, and then also talking about yourself sort of in that light of why, you know, yourself as why you're a good candidate for X, Y, and Z, right? So that networking aspect ends up being one of the most important factors that differentiates people along the way, not just in terms of the people that you meet and make an impression upon, but also in terms of building your own confidence, talking about your story, talking about your experiences, asking good questions, being prepared for conversations, being prepared for information, all that stuff. So I would say do everything in your power, even if it means like sort of being a little bit outside of yourself in meeting new people and putting yourself out there. Just start tactically by just, whether if you're a freshman or a sophomore, just make a list of 5 people that you want to reach out to and say, hey, I'm really interested in this what you've done. I saw that you got an internship here. I saw that you got a full-time job here. I saw that you're working here. I am a Duke alum or I'm a Duke student. I would love to connect on X, Y, and Z because I think it's really interesting, and just start putting yourself out there. I'll get to networking in a second in a little bit more detail. And then the fourth part is just preparation. So you guys are going to be at different stages of the process, but I would just say, start thinking about how to present your story. Start thinking about how to, think about your own strengths and weaknesses and how you want to make that come across, as well as start following the markets, right? So I think just find things that you think are interesting, because, when it comes to interviews or when it comes to informationals, one of the questions I like to ask is, hey, what are you following that you think is interesting, right? It doesn't have to be, what is the 3 ways to value a company? In fact, we almost never ask that question. I think we always ask the question, like, what do you think is interesting, right? Like, why? Well, why do you think this is an interesting business? That opportunity is interesting. Why do you think this company did a deal? Why do you think they went IPO now in this market? So I think, I just remember, I think I've done 1,000 interviews in banking and private equity over my career in the last 8 years. And I've been in interviews where I've co-interviewed with senior partners. I've been in interviews where I've co-interviewed with junior people, like, VPs and associates alongside me. And I would say 80% of these interviews, 90% of them have just been conversations. So I think the more you guys can put yourself out there and build that up, and look, it's not like you just wake up and go interview and get a job. It's just building those skills, that knowledge, et cetera. So I just challenge you all to sort of build those parts of yourself, and it'll just help. Transitioning to, I think that's on the banking side. I will get into a little bit more details if people want, but I think on the PE side, it's a little bit more of a story development, right? So you got to convince us why are you looking at investing? And I think this is one thing, a lot of you guys, it's really hard to get an internship in banking as a sophomore or a freshman, right? It's just there's just the structure isn't there yet. We're trying to work on some of that on the Elevate recruiting side. So hopefully we'll have some more stuff for you on that side. But I think more broadly, like, a lot of the responsibilities or firms that you might be thinking about as early on, as well as later on, is going to be in, smaller growth equity, firms in the Southeast, or, small VC firms out in San Francisco, or whatever the case. I think the biggest question they want to know is, why investing? Like, why, what are you thinking about? So I think for investing roles, it's a little bit more about storytelling, as well as, those sort of thematics around investing and in ideas and trends that you find interesting. If you want to forward to PE recruiting sort of later on in your career, sort of as a first year analyst or something like that, then it's definitely about storytelling, convincing people why you're going to be a good, why you want to go into investing, as well as what have you done, whether it's your summer internships or your job, that show me that you can handle kind of the rigor of the job. So I would say for people, which is most of the audience, which is, sophomores and juniors and maybe freshmen who are sort of looking at these careers, I would start with career exploration, self-exploration. Number 2, start building that professional experience list, whatever it is of opportunities. Number 3, networking and building relationships. And frankly, that applies to everyone. And then number 4, over the time preparation of understanding about financial markets, investing, trends, businesses, et cetera. So those are if I were to give you a cheat sheet of things that I would recommend you guys start focusing on, that will then help you kind of get from point A to point B.
Awesome. Yeah, that was all super helpful. Wish I had heard some of that stuff before I went through recruiting. But I think we're gonna go into Q&A now for like 5 minutes. I know we're running to the pitch time a little bit. So if anybody has a question that they want to ask, you can just unmute yourself and then ask your question.
I have a quick question. So I don't know how much of this you touched on earlier, but how accessible is it to be able to pivot from working with one sort of investment to another, with that move from banking to PE, or do people really tend to stay in one lane? Like if you do want to change, how possible is that?
Yeah, I maybe it's not. I mean, I think sort of depends on, I guess, what you mean by investment advisor. If you just kind of are thinking about the transition from banking to private equity, those are two different careers, right? As in nature of the business is different. There's natural ways to people do that, over their career, right? So whether it's post MBA, there's a lot of switch. Pre MBA, you can go from a banking or consulting program into private equity. One thing I will notice, those are very competitive, right? So I think, and what I mean by that is there's a lot of people who they want to do that. And so one thing I would just say is understand for yourself, like, why you want to do that. And more importantly, like, if it is investing that you're interested in, what type of firms that you think, or what types of investing are actually interested in? Are you interested in public investing? Are you interested in growth? Are you invested in PE? And what I just mean by that is, like, what do you want to be doing, right? In terms of, even if it's investing, do you want to be investing in public stocks, or do you want to be investing in startups where there's zero information, zero, historical track record? Or do you want to be investing in, established companies that have been around for 5 years, where you're taking more of a, financial, approach to building a balance sheet and things like that? So I would just say, there's definitely natural ways to transition. It's not it's not like a crazy thing to think about going from banking to PE, or going from banking to growth. I think it's a lot more about, where in that do you want to do it, and when you're going to do your career. There's just natural times it's a lot easier to do that than other times, like I mentioned, post your analyst years, or your post your MBA. And then where, right? I think that's the other thing. Where do you really want to invest? Do you want to invest for the next 10 years in technology? Then you should be looking at, technology investing firms, or VC or growth. One other thing I'll note about transitions, I think when I first started in the industry, like almost everyone would go into PE, like mega funds, like buyouts at GS. Over the last 3-4 years, a lot more of my older analyst associates, and a lot of my MBAs actually. So I'm speaking at I've been speaking at Wharton, HBS, et cetera, this fall, and I think one of the things that we're getting there is a lot of people, because of how the tech sector has gone, are actually looking to go either post MBA or pre MBA into VC growth, because there's a lot of capital in that space. So I would just kind of maybe challenge you to look at where in that spectrum you want to look at, and then go deep. And try to just become good at that part. So the transitions is easy if you pick the right time and right place. And then it's just about being ready, prepared, and doing that. And the nature of the work, look, early on in a career, you should be doing different things. So going from banking to PE is not like the biggest sort of delta in terms of your day-to-days, at least early on. Is that helpful, Parker?
Yes, for sure. Thank you.
Okay, yeah, you got it. Just a reminder to fill out the spreadsheet if you guys haven't. What else?
We just got a question from Victor. His mic is a little bit loud, and so he was hoping I could pose it for in his place. But he's wondering if an MBA is still necessary today.
Oh, wow. Okay, so Hannah/Victor question. It's funny because I think in the last 2 weeks, I've probably spoken at 6 undergrad universities, and guess what? I've gotten that question in every single one of them. And so I think, it's sort of an indication, I think, of people's mindset now, but also I think an indication of where we are in the world, right? As far as, where the opportunities lie, et cetera. I'll try to kind of, and I would encourage you guys actually go on the Elevate stuff, and I feature a lot of people who've gone down the banking, private equity, MBA, then private equity sort of path, or on entrepreneurship and stuff. So I'd kind of say, go back, and if you want to listen to some of those people and their reasons for doing that, I'd encourage that. I think though, to me, the MBA makes sense for like a distinct group of people. One is needed in their career. So if I think a lot of private equity firms sort of still require you to get that MBA to make principal and then director. So I'd say kind of for that group of people. Second group of people, I would say people who are looking to career switch. So go from like public investing to private investing, or go from entrepreneurship, or from entrepreneurship to banking, or from banking to PE or whatever. It's just a natural place to do that. And then I think the third thing is just people who are looking to just turbocharge their networking and meet as many people as possible. And frankly, people who might be more entrepreneurial, like they want to launch businesses and want to get a full array of not just finance, but, operating, marketing, strategy, everything, leadership, management, etc. I think, frankly, you guys, I sort of, maybe beyond the top 10, I think I'm doing a workshop at Fuqua actually next month. And I think beyond, and it's one of the topics we're gonna talk about, I think it's sort of, there's diminishing returns based on where we are in the market, but also I think where we're sort of headed. So if you don't quite fall into one of those 3 buckets that I just talked about, I think you should really have to evaluate why you want to go into business school, and to get the maximum out of it. Over the last 6 years, having seen, I guess now 6, 7 years of classes of MBAs go through at all these top 10 schools, the people that have been the most successful are people that have sort of a laser focus on why they want to go to an MBA and then go all in that during that time, because the opportunity cost of 2 years is a lot, right? So you are pausing your professional career to go do that. So I would challenge you to do that. The second thing I would say, or maybe the third thing here, is everyone is going to be different, right? So there's going to be people on this call that are going to go have great careers and never get an MBA, and there's going to be people who are going to have great careers and go get an MBA, right? So I think I would also leave that optionality open. I know a lot of you guys at some point will have the option to apply to 2 of 2 programs and 2+2 programs and things like that. So leave, I think, the optionality open still. I think maybe 5 years from now, I think the MBA probably has diminished a little bit more value, kind of where we're headed. But I think leave that optionality open and really make that decision for yourself after you've started working, right? So there's really no reason to make a decision on that before then, right? So I think one thing I would just say, look, go work somewhere, figure out if this is a career path for you and if this is actually kind of giving you that upward mobility. If not, then consider an MBA. If it is, then continue going at it. So I don't think it's sort of that rubber stamp that it used to. But I think it's still really helpful to build networks. And I think it's interesting you mentioned that, like, networking stuff that we're doing for Elevate. It's to sort of hopefully help bridge that networking gap that is such a big factor and attractor at the MBA level. But for all of you guys who are going to be future MBA students, right? So if you can build networks in new, innovative ways with other really high caliber people, maybe you don't need an MBA over time, right? So I think just something for you guys to think about. At the end of the day, it's all about people and connections. The biggest thing that people can say, hey, I went to the, and that's sort of something that stays with you for the next 30 years of your career. A business card, right? Hey, I'm an MBA graduate from this school. So there's this level of common understanding that people have. And I just think, over time that probably is still there for the top 10 schools, but beyond that, it's a little questionable. So that's my thoughts on MBA.
Awesome. I think that's all the time we have for today, but thank you so much for taking the time out and everything. That was, I hope, super helpful for everyone. I know it's super helpful for me, but yeah, thank you so much for taking the time out to speak to us.
Thanks for having me, guys. And yeah, best of luck, everyone. And yeah, Phil, if you haven't, you'll get more info on all the panels and stuff, but best of luck, folks.
Thank you,
Yeah.
Ashley.
Thank you so much. All right, Michael, should I stop the recording now?
Yeah.
Okay.